is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at Sharm el-Sheikh at COP27. Now, the focus, of course, is not only on ESG, it's on the midterms and what that means for regulation of ESG and therefore what it means for your money. Now, this is what's coming up on today's program. Too close to call. Control of the Senate comes down to just a few states. Republicans edge towards a slim majority in the House. Many races remain in the balance. U.S. futures are flat as traders look for signs of gridlock on Capitol Hill, which historically has fueled equity gains. Plus, crypto mayhem. Digital markets plunge as doubts grow over the Binance FTX deal. Bitcoin slumps towards the lowest level in 2 years. Now, Danny, a lot going on in the market because we're trying to figure out what happens in the U.S. and what it means for regulations and asset classes. What do you have? And good morning, Danny.
Good morning, Francine. And it's, of course, not even just that. It's also inflation data that's going to hit the tape on Thursday. So it's a lot to digest, which means there's been a lot of back and forth, a lot of gains, a lot of losses. At the moment, we are looking at a worse performance in Europe. We've had some earnings there. S&P 500 futures, those more or less flat, Francine. At one point, they are up. Tech futures, those are still higher. A bit of a head scratcher, given that tech is so correlated with Bitcoin. I'll get to that in just a moment. But it could be the macro picture eating risk assets here, at least for the U.S. More pain for the dollar. Asia FX is outperforming. We are seeing yields lower. Again, that could all change on a dime, given we have that inflation data tomorrow. And finally, Bitcoin. That has been the big loser. The move that shocked the crypto world. CZ of Binance stepping in to take over FTX, which he said was seeing a liquidity crunch. The terms of that deal still not very certain. Will it go through? All we've seen are some things tweeted out, but still Bitcoin down, Francine, 12% counting yesterday and today.
Danny, thank you so much. Let's now get the latest on the U.S. midterm elections. Republicans advancing towards control of the House, but by smaller margins than forecast. Democrats, meanwhile, have flipped a Senate seat in swing state Pennsylvania. Now, for more, Bloomberg's Kriti Gupta joins us from Washington. Kriti, I know you've been up all night. I know you're looking at the numbers very closely. But does the end of a one-party dominance in the U.S. change the whole outlook, actually, for the U.S. economy?
It absolutely does. Look, if you're a stock market investor, all you want is a little bit of gridlock because historically that is what has led to equity fuels. Like humans, the markets don't like a ton of change either. So that seems to be the base investment case. But remember, there are risks that still come with it. The idea of regulation, the idea of taxation. Specifically, if you start to see that Republican majority, yes, it might come with gridlock, but it also might come with a shift in changing simply spending priorities. Think about things like defense. Think about things like pharmaceuticals, drug pricing, cannabis legislation, even some of the investments in terms of energy infrastructure. Those are all up for grabs depending on which side actually wins the House and the Senate. Now, this is crucial. Right now, you actually have a Democratic majority across the board. But if you do start to see Republicans come in, take either the House or the Senate, one of the major changing factors is going to be that easing on a lot of that antitrust legislation that the Biden administration has really been pushing. Think about this from a tech point of view. Your Apples, your Amazons, your social media companies, a lot of what has been driving the losses on the S&P 500. This is a potential bull case for a turnaround in the stock market.
So, Kriti, the Senate is still in flux, right? Could it actually come down to then what happens on December 6th in Georgia? How close are we to calling it?
So the House is too close to call. We still have about 35 governor races that are not 100% cleared yet, also too close to call. The Senate is really where things are getting pretty dicey. Remember, there are still 6 races that are left. And yes, we are still waiting for the Georgia runoff race, but that isn't necessarily what Republicans need to catch the majority. 3 key races, 3 key Democratic seats, Arizona, Georgia, and Nevada. Republicans only need to flip 2 of them to get a majority in the Senate. If they are able to turn around Arizona or Nevada, they don't even need that Georgia Senate runoff race to really kind of stake their claim. That being said, the likelihood of that happening in Arizona seems pretty slim. Carrie Lake, of course, the Republican there, also known as someone who has a Trump endorsement and well known as an election denier, she still seems to be lagging. So once again, it may very well come off to that Georgia Senate race for the Republicans, Francine.
Kriti, very quickly, because we also have, Republican DeSantis in Florida, Democrat Newsom in California. Does this foreshadow what will happen in the presidential race in 2024?
It's been so interesting coming into this particular race because the soul of the Republican Party has almost changed overnight. We came into this race tonight thinking that there's going to be a big Republican wave, but now it feels like some of the momentum, specifically from those who had President Trump's endorsement, have actually lost their cases, whereas the Republicans who were perhaps seen as more moderate, like Governor Ron DeSantis in Florida, they've actually won, and they've won by a fairly big margin. So one of the big questions here is now going into 2024, as we perhaps anticipate a presidential run from President Trump or former President Trump, is he the only option for the Republican Party? And tonight, I would say that has been the real game changer.
Yeah, it certainly has. Kriti, thanks so much for all of your reporting, of course, on the ground. Kriti Gupta there in Washington, D.C. So we'll have plenty more on the race, on the midterms, what it means for the economy, what it means for asset allocation. Joining us now is Christian Muller-Gleesman, Head of Asset Allocation Research at Goldman Sachs, and Hugh Lukens, Senior Partner at Signum Global Advisors. So thank you both for joining us. Luke, let's just kick off with you. What does this mean for 2024?
Well, I think as your correspondent just said, last night was sort of a blow to Donald Trump. Some of his more radical and his key endorsed candidates did not win their elections. And I think it really reflects a shift from who is the future leader of the Republican Party. I think Trump probably still does announce his candidacy next week, but I think his candidacy is much weakened after yesterday's results.
What does that mean, Lou? And then I want to look at, how Goldman Sachs look at some of the regulatory risks. But when do you feel confident, Lou, to really understand what happened? Does it take Friday? Could it take actually longer to have an idea of what happens next?
Well, look, I think it's really coming down to Nevada, Arizona, and Georgia, and I think the Democrats are picking up or keeping Arizona. Nevada is very much of a toss-up. The race is now within sort of 400 votes. With about 78% of the votes counted. And Georgia, I think, is clearly going to go to a runoff. And so the Democrats have to pick up one of those two seats to keep control. And I think they will. And I think we'll have split government in Washington, which means a Congress led by Republicans that won't want to pass any legislation that supports Joe Biden's agenda. But at least Biden, with Democratic control of the Senate, will, if that is what happens, and I think it will be able to get his judicial nominees and other key appointments through for the next 2 years. And I think that'll be critical to his governing.
Okay, Christian, what does this mean for how you game the U.S. economy? I know Goldman being Goldman, you have model and analysis, and I'm sure you've studied it within an inch of your life. What are you expecting in terms of possible changes for regulation? And so what does that mean for portfolios?
We're in the middle of an inflationary bear market. So the market doesn't want any more fiscal spending. The market wants to have essentially policy gridlock. And I think in the run-up to this, the kind of prediction markets were very clear that you get a divided government. And I think equities have actually taken quite a bit of relief already from that outcome. So I think as we go in this direction, I don't really think there's that much new news we're having here at this juncture. I think you're right. I think the kind of outcome you have on the Senate can matter a bit. If the Senate actually goes to the Democrats, that would be a bit of a surprise compared to the prediction markets. But to me, I think it just kind of is further helping equities find relief here, where I think you're really trying to play the peak inflation kind of narrative. And I think if you don't have a Democratic sweep, which kind of further drives tax cuts, etc., I think that's good for markets.
So, Christian, what's the biggest unknown? We know, because we've been following this for quite some time, that the Republicans were united in being against some of the spending that we saw from the president. What does it mean for energy regulation? What does it mean for financial regulation? Is that going to be a fresh battleground that's just too soon to call?
It just seems soon to call. I think you're having a divided government, and as was mentioned earlier, that means probably a lot of political projects are being somewhat put on ice, and kind of bipartisan type agreements probably are much more reactive to crises, are much more reactive to kind of having to deal with problems. I think a key focus for clients from us has been the potential debt ceiling, which is next year. So I think that would be very interesting with a divided government if that poses a risk. And that's an uncertainty. But outside of that, you could say as of now, uncertainty is coming down because the likelihood of getting major new policy projects done has decreased.
Yeah, and Lou, I know it's a little bit too soon maybe to speculate, but actually what does this mean for the debt ceiling? As the numbers are coming in, and as soon as we have breaking news, we'll bring that to you. But what are the key points that I guess are stress points for the markets if we game theory over the next 7 to 8 months?
So I think it's true that there'll be less legislation in a divided government, but I do think there is a greater risk of friction. And I think the Freedom Caucus, sort of the very conservative, MAGA type Republicans, will have even greater sway in Congress because the Republican control will be by a smaller number than people had anticipated. And I think they will make life very difficult for their leadership, for Kevin McCarthy, but also for the White House. And they will want to use their leverage to extract concessions from a Democratic administration when it comes to the debt ceiling, when it comes to the annual government appropriations bills. And they will try to negotiate for their points. And it will lead to some very difficult negotiations, especially around the debt ceiling, which we think will be a big risk about halfway through next year.
Christian, what's your call on dollar? Where does it go from here?
Yeah, I mean, it's been a remarkable relief on the dollar. And I think you obviously have another big event today, which is the inflation data. And I think markets into that have seen a decent amount of relaxation with regards to kind of rate hike fears with regards to the Fed. And I think our economists, they're also a bit below consensus because you're likely to see a decent amount of used car price kind of declines. You also have healthcare inflation likely to come down. And I think the market has traded that into this event, both in risky assets and in the dollar. And this whole idea of peak hawkishness has continued. The risk is clearly on the other side now. I think we've had the dollar quite weak. And the dollar is driven by an economy which has very different problems to the rest of the world, where I think a lot of the kind of inflationary forces are negative terms of trade shock for the non-US currencies, whereas the inflationary forces in the US, they're forcing the Fed to kind of go more aggressive. So if the data today surprised to the upside, I think the market needs to reconsider peak Fed funds rate, even though it might not mean kind of stepping up again to 75 basis points for the next meeting. You might have to reconsider peak Fed funds rate, which could actually drive the dollar temporarily higher again.
Christian, do you believe that actually the US at this point could avoid a recession?
I think our house view, as you know, and we've been having that view for most of this year, is that that's possible. We have a probability of a recession still at 35%, and we do think a soft landing for the US next year is possible, with the US growing kind of at 1% or so. As we all know, I think there is a lot of risk to that, a lot of risk coming from financial stability and from markets, because the higher you push up rates, the more you worry about liquidity issues. And you've had another one in the Bitcoin space just recently, and you worry about solvency issues. And these solvency issues, they take time to understand and to see feed through in the economy, especially this time around, because corporates have extended the kind of duration of their debt. The refinancing needs currently are quite limited. So it could take time to understand how this risk evolves. I would still say that from a market's perspective, we are more worried than maybe 35%. And I think what I don't like in particular is that the cycle extension narrative, which has come with the step down hopes around the world, I think has created a lot of relief in cyclicals and financials. And we've seen one of the strongest rallies in the Dow Jones Industrial Average since the 70s. That just worries us a bit, how quickly that has happened.
Lou, very quickly, is it less likely now that Trump runs?
I think he'll run. I think he probably still will announce next week, but I think his standing has been diminished in the party, and my guess is that will embolden his rivals to run against him and to announce. And I think he probably ends up dropping out, sometime in the next year. I don't think he sticks with the election, with the run, but I do think he announces and makes a go at it. Yeah.
All right, so thank you both for joining us. Lou Lukens, their senior partner at Signum Global Advisors, and thanks also to Christian Muller-Gleesman. He's head of assets allocation research at Goldman Sachs. Now, coming up, we'll of course go back here where I am to Sharm. We'll be speaking to the IEA Executive Director, Fatih Birol. This is Bloomberg.
What's been disturbing to me is the number of people, particularly, frankly, on the side of the House Republicans, who have said that if they don't get their way on a whole set of issues, they're going to send the country into default by not being willing to raise the debt limit.
Larry Summers there warning against the standoff over the debt limit as results are still coming in for the U.S. midterms. Now, joining us now is the IEA Executive Director, Fatih Birol. Fatih, as always, thank you so much for joining us. You really make us smarter to understand the energy market and some of the concerns out there. When you look oil and gas right now, are they investing the right amount? Are they investing too much or too little for the transition to green?
I think for the transition, it is where we are. So about this year, the fossil fuel investments are close to $1 trillion US dollar, but it could be only meaningful, it could be only provide as a secure energy world if we were at the same time made major investments in clean energy. Because the global energy demand will grow. The world will need a lot of energy. The question is, are we going to get this energy from fossil fuels or from clean energy? So this is the decision that we have to make. Currently, we are in between. We invest in both of them, but not enough.
Do you have analysis of like $1, for example, in old fossil fuel needs to be like $5 to be spent?
Today, just very simple. Today, there is $1 investment goes to fossil fuels, and $1.50 goes for clean energy. To have a secure and clean energy future, this $1 for fossil fuel should continue, but $1.50 for clean energy needs to go to $9. So there is a need for 6 times of an increase for clean energy investment, which is the topic of here, COP27.
What happens to the price of oil? Is it going to be high enough, even at this level, it's quite high, to cause a recession or to plunge us even more into a recession?
So we know that the world is about to, in many markets, slide to a recession. In that respect, the recent decision of OPEC Plus to cut the production by 2 million barrels per day was definitely not helpful. So we are going to see main economies such as China, how they are going to perform. If Chinese economy was to rebound next year, we may still see some tightness in the markets. But in any case, oil prices approaching to $100, nobody can defend that this is a helpful move to decrease the production by 2 million barrels per day because it is causing inflation, economic weakness, especially in developing and emerging countries.
Are you calling on OPEC Plus to reverse those cuts?
In the past, I mean, the decision, recent decision of cutting 2 million barrels per day, in my view, as somebody who followed the OPEC Plus countries since years, was unprecedented. When they, of course, countries wanted to see higher prices, but when they understood that the world was about to go to a recession, they behaved much more responsibly and comfort the markets. But this time it was the opposite. So as such, there may be a merit to rethink about that very decision of cutting 2 million barrels per day.
Unprecedented because you believe this was politically motivated?
I think this is what, when you look at the global energy landscape, geopolitical context, almost all the countries, in the developing countries, emerging countries, advanced economies, they all wanted to see a good news, comforting news from the OPEC Plus countries. Unfortunately, they didn't receive this.
Talk to me a little bit about gas. So there's a mad dash, really, especially from European countries, to get into LNG to have enough fuel for the winter months. What does that mean for the transition?
This is a very good question. I mean, this winter, which was very much the nightmare for many Europeans, seems that Europe can go through this winter with some economic and social bruises here and there, because we have put a lot of gas in the storage. 95% is full. But now there is also next winter, which may be harder for 3 reasons. One reason is we were able to put a lot of gas in the storage because we still in Europe get gas from Russia, which may not be with us next year. Second, again, the China factor. China is the top LNG importer of the world. since Chinese economy was not doing well, for the first time since decades, Chinese LNG imports declined, providing a room for Europe to get LNG. But if China rebounds next year, China may well again get a lot of LNG, and this is bad news. And third one is that this is very important. Next year, the amount of new LNG capacity coming to the market is 20 BCM, which is one of the lowest in the last 15 years.
I mean, it's the lowest, but it still extends the life of fossil fuels.
Yes, definitely. It is extends, but this 1 or 2 next few years, we will still need gas in order to substitute the Russian gas, because we are not adding, we are substituting the Russian gas, which will lose a lot of market share. Please think about this. 24th of February, Russia was selling 75% of this gas to Europe and lost it, maybe lost it forever. So therefore, there is a need for Europe to substitute this gas in the short term, and LNG is one of the answers to that.
Who is actually buying Russian oil and gas right now?
I think Russian oil today, many countries are buying, but the increase in the Russian oil imports mainly come from China and India. But it is not unlimited. There will be a limit to that, and Russia was exporting about 2.5 million barrels per day of oil to Europe, and all of this oil, to find a new home, will be impossible. So for gas and oil, when we look at both of them, I think Russia's role in the future will be much more diminished compared to today.
But again, you look at data that really shows us what kind of recession. So we have central banks trying to almost put us in a recession to make sure that inflation comes down. Are you seeing any of those signs in oil demand?
Definitely. Oil, electricity, electricity demand is always a good indicator, an early indicator. I think in some parts of the world, especially in Europe, we may see a recession, but this may go other parts of the world. But once again, our attention is mainly focused on the advanced economies, but the countries who would suffer the most as a result of this decision of cutting the oil, inflation going up, will be the emerging countries, energy importing emerging countries in Africa, where we are here, but also Asia and Latin America.
Fatih, as always, thank you so much for joining us. Fatih Birol, they're the IEA Executive Director. Coming up, as Republicans make gains in the House, but with the Senate still too close to call, we'll give you the latest on the U.S. midterm elections. If you look at the markets, for the moment, they're kind of trading sideways. We also have a wonderful blog that you can find on the Bloomberg terminal for the very latest, not only decisions, but some of the analysis. The smart analysis says maybe it's not until December 6th, and that, of course, race in Georgia, that we'll have a clearer picture of what can be done in terms of regulation, but also how the U.S. economy will change because of the midterms. This is Bloomberg. Too close to call. Control of the Senate comes down to just a few states. Republicans edge towards a slim majority in the House. Many races remain in the balance. U.S. futures are flat. Traders are looking for signs of gridlock on Capitol Hill, which historically has fueled equity gains. Plus, crypto mayhem, digital markets plunge as doubts grow over the Binance FTX deal. Bitcoin slumps towards the lowest level in 2 years. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP27 in Egypt. Of course, the big story of the day, the U.S. midterm elections. Republicans actually advancing towards having a little bit more control of the House, but by smaller margins than forecast. The Democrats, meanwhile, have flipped a Senate seat in swing state Pennsylvania. For more, Bloomberg's Kriti Gupta joins us now from Washington. Kriti, what's the state of play right now?
Yeah, Francine, let me just give you the highlight reel for both parties. I'm going to start with the Democrats. That flip seat that you mentioned is crucial because no state, no region, no county has seen that flipped Senate state anywhere, except for, of course, in Pennsylvania, John Fetterman beating Mehmet Oz. That's going to be crucial when it comes to the bellwether for the presidential election in 2024. On the Republican side, though, perhaps not the Republican red wave, the momentum that everyone was expecting, but a true message about simply the soul of the Republican Party. No longer is it the base case scenario that a presidential run by former President Trump, it has to be the way that the Republican Party goes. Instead, you're seeing a lot of the Trump endorsements not really pay off in the way a lot of people expected. Instead, yes, a lot of Republican wins, but really the highlight for the Republican Party is going to be Ron DeSantis and his re-election win in Florida. The idea that a moderate Republican can perhaps take the party to a 2024 presidential win.
Okay, Kriti, thank you so much. Kriti Gupta in Washington, D.C. out for like 48 hours. At some point, you need to get some sleep, although you look as fresh as a rose. Now, the outcome of this year's midterm elections certainly, of course, have certain implications for America's allies in Europe. For more on this, let's go straight to Maria Tadeo, who's in Brussels. Maria, the world still waiting to see how this all plays out. Either way, what does it mean for Europe?
Yes, Francina, you're right. The result's still not official, so therefore no official comment from the European institutions. But Francine, the reality is every diplomat that I know is keeping a close eye on this, and they monitor this election. And if indeed we see a change in the status quo from Democrat to Republic, I'm not sure if concerns, but there will definitely be immediate questions in terms of some of the big issues at stake. We know the Biden doctrine on Ukraine is very easy to read for the Europeans. It is yes to the weapons, yes to the funding. The language they use is very similar. We're in it for the long haul. Could that change? And that, of course, another big question, Francine, here will be trade. Remember, the last time the Republicans held positions of power, it was America first and multiple trade tensions between the European Union and the Trump administration. So clearly one that has ramifications for the European Union, the single market, and one to watch.
Maria, thanks so much. Maria today, of course, in Brussels. She will stay abreast all of these developments in the U.S. and what it means for allies. Now, for more on the economics of all of this, we're joined by Simon Kennedy, Bloomberg's executive editor for economics. Simon, I know you've run the numbers. I know we've looked at state by state what this means for economic policies, probably regulation. What's the overarching theme, given what we know now?
I think the main theme, and given what we know now, is we perhaps haven't had that wave that was forecast, but still, if the House goes Republican, you're going to see a kind of sense of gridlock going forward, which some people in the markets like it just that way. They view that political negotiation ends up in better policy, but certainly with perhaps a recession bearing down, a Democrat House would perhaps have lent more into spending and tax cuts than a Republican House is going to do so. So Wells Fargo economists saying beforehand they didn't expect a huge effect on the economy. Perhaps that holds even more strength now, where you see a much closer result than perhaps had been forecast.
So, Simon, give us a sense. There are battlegrounds that we know, for example, on spending and things like that. Are there any, more lesser-known battlegrounds? I don't know if it's regulation or finance that will have an economic impact that we need to watch out for.
Well, I think one big topic that's going to come up very soon, certainly by the third quarter of next year, is that topic of the debt limit, a kind of political bugbear for markets and the economy for several years now. Back in the day, it was always a negotiating issue for the Republican Democrats to wrestle over. Last time around, it became far more heated and delays in lifting the debt limit, which actually is a result, ironically, of everything that Congress and the president agreed beforehand in spending and tax cuts. They get another chance to grumble about them when the debt limits hit. And that looks likely to do so in the third quarter of next year, if not sooner. So once that's hit, certainly as a presidential election year of 2024 nears, you're going to see a lot of grumbling back and forth at different ends of Washington about that. questions about whether the US can default, once an impossible thing to even consider. Last time around, certainly it was a topic of debate, and that unnerves markets. In theory, has an effect on the economy that way. So that's probably the biggest issue that's going to come up in the next year from an economic financial point of view, that debt limit discussion. Will they increase it at some point? Yes. There's probably going to be a lot of fighting beforehand, though.
Yeah. Given, Simon, there wasn't this red wave that some were expecting, does it matter significantly to inflation expectations, or does it impact, how markets just think about the Fed?
Well, one thing for the Fed that the Fed might run into in a Republican-controlled House and a more divided Senate is perhaps that topic of what it's doing, about how much control or oversight Capitol Hill should have over what the Fed does, and that kind of political criticism, which we've already seen in recent weeks from the Democrats. That political criticism may grow on the Fed into next year. Certainly, if it keeps raising rates, as it seems likely to do so. It obviously is in trouble for missing the inflation surge of next year, could be in trouble for driving the economy lower next year. But if there's gridlock on the Hill on fiscal policy, it falls to the Fed to run the economy to some extent. And so again, this probably increases the chance that the Fed keeps raising rates into 2023.
All right, Simon, thanks so much. Simon Kennedy there, Bloomberg's executive editor for economics, looking at what could happen actually in terms of economic policy going forward. Coming up, 91 Chief Executive Henry Toit joins me here. We talk about the midterms, what it means for dollar bulls, and of course, what it means for well, not only dollar, what it means for the emerging markets on the back of it. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP27 in Egypt. Now, joining us now is 91 Chief Executive Officer. He's Henrik du Toit. Henrik, thank you so much for joining us. We're here, we talk about ESG, we talk about greening, but there's one story in town, and it's the midterms. How does it change your capital allocation today?
Good morning, Francine. It's great to be with you. I mean, clearly, this was not unanticipated. The swing has not been as radical as some people predicted. So the US is going to be in debate with itself for a while. I think the important thing is we now need to be planned for a potential change in administration. So that's first thing. Second one is, as far as climate is concerned, which is the relevant point at COP, it's really important to understand the US in granular level, state by state, account by account, because many people will still continue on the agenda that they had, which is cleaning and greening. I mean, Biden's massive legislative intervention is going to outlive him and be with us.
But how do you prepare for a potential change in administration? Do you just buy equities?
No, because I think clearly where we are at the moment in terms of business, Republicans typically, as you go through history, are quite supportive of equity prices. But the fixed income markets have to take their course as they have done now. You never drive your decisions by one political event. And this event was not unanticipated.
It wasn't anticipated, but then there are going to be fresh battlegrounds in terms of regulation. The economic policy, once you don't have one party in charge, could be very fraught.
I think the one positive about that is if one looks from a global point of view, the Democrats have been extremely hard on pushing China in a corner and decoupling systematically, including the financial system. I think under Republicans, it will be a much more business-driven approach. And even Trump, he talked about a lot of things. He didn't do as much. And I think we're in a world where maybe the two big economies can find a way to cooperate, whatever the political differences. And finally, emerging markets stand, in a sense, to benefit because the available climate finance may come there rather than go into the developed world because of uncertainties, but who knows?
Yes, but also the dollar strength at the moment is killing a lot of emerging economies. Have we, you think it continues? We haven't reached peak dollar?
I don't think we're over yet. Peak of interest rates, peak of long-term interest rates.
Peak inflation?
Peak inflation, but we're probably even closer to that. But when interest rates start on the down, long-term interest rates, that's when you normally get a reset in the currencies. I don't see it in the near term. I think the dollar is going to be strong, particularly if you look at Europe's position.
But so that's not great for emerging markets, even if they get the money that some of the richer countries promise them, and that's a big question mark. What does it mean for some of these economies? Where are you invested?
I think it goes further. Obviously, export performances are going to be strong in the ones. What I worry about is the emerging markets without decent trade balances that are totally dependent on the kindness of strangers. But actually, some of them are doing very well. Where we sit here in the Middle East, and Egypt had its currency issue, but if you go a little east to Saudi Arabia, UAE, etc., life's actually very good there.
Well, with the price of oil,
exactly.
You'd say so, but then at some point, does that price of oil, if it gets further, push us all in a recession?
Where I see, from an investment point of view, the call is really when interest rates increase, where the inflation peak is, and fossil fuel energy prices. But as long as the oil price stay high, again, bringing it back to COP, the clean energy operators can do very well and will attract capital, and that's been the big benefit from this high oil price that we've seen that has not been spoken about. And remember, we need 3 times as much investment in clean energy as in fossil fuels to get the world to net zero.
So where are you invested right now for this green transition? Again, you have to deploy capital, uncertainty about regulation on ESG in the US, but then we're talking about taking maybe a longer time to transition out of fossil fuel.
A very exciting opportunity and relatively low risk opportunity is in the debt that finances the energy transition, because most of the businesses that have to transition quite carbon heavy but are also very cash flow strong, and they don't want to dilute their equity at lower prices to the extent that they could, and therefore you could get reasonably well priced debt to do it and play a positive role. So transition debt is where we think the action is going to be.
Specific countries?
Countries mostly around the emerging markets. Yeah. We are just very, very scary or very worried about small frontier markets that don't have very strong commodity bases because many of them are overgeared. I think, interestingly, if you look at a place like China now, financial markets have stabilized post the conference. Actually, there's some reasonable value in the paper, given the quality of the credit. And of course, emerging market corporates are in very good shape.
Hendrik, thank you so much, as always, for joining us on Bloomberg. 91 Chief Executive Officer there, Hendrik du Toit. Coming up, we'll talk about cryptocurrencies. They've plunged. That's been quite a significant move. This is as Binance moves to take over rival exchange FTX due to a liquidity crunch. More on that story next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in COP27 in Egypt. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Citigroup and Barclays have started eliminating jobs in their investment banking operations, joining other major lenders in responding to plunging revenue from the businesses. Sources say about 200 posts are set to go at Barclays, with dozens already fired at Citigroup just this week. Now, Disney shares have slumped in US after-hours trading after fourth quarter sales and profit missed Wall Street estimates. Losses at the company's direct-to-consumer arm, driven by the Disney Disney Plus streaming service more than doubled to almost $1.5 billion in the recent 3 months. Theme park profits also fell short of projections. New COVID cases in Beijing have jumped to the highest level in more than 5 months, with officials alarmed by the infections being found outside of quarantine. Meanwhile, China's biggest outbreak in Guangdong province, which is the main driver of the national caseload, which rose more than 7,700 on Tuesday, the highest since April. And Elon Musk has sold at least $3.95 billion worth of Tesla stock just days after his Twitter buyout. The sale was his first since August and brings his total disposals in the car maker to $36 billion over the past year. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, cryptocurrencies have plunged as Binance moved to take over rival exchange FTX due to a liquidity crunch. The deal is renewing concerns of trouble brewing within the industry and among some of the top players. So for more analysis on this, let's get straight to Alex Webb from Bloomberg Quick Take. So Alex, what do we actually know about this deal and what prompted it?
So details are a little bit scarce and things have been moving very, very quickly, but it seems to focus on a subsidiary of FTX that carries out a lot of trading, and FTT, which is the in-house currency at FTX that it uses so that some of its customers can get, little perks and bonuses. And it seems that a great deal of the capital reserves in this trading subsidiary were in the form of this FTT. Now, that wasn't necessarily particularly frequently traded, and there's a suspicion that Binance, which held some of those shares and held some of that token, decided to sell some of that token. That might have accelerated the liquidity crunch. Now, we don't know the motivations for Binance CEO CZ, but it has clearly created an opportunity, or helped create an opportunity to acquire this significant rival.
So what are the broader ramifications for crypto in general?
FTX was a significant player in the space, and so it's created a little bit of a shudder in the market. We can see Bitcoin trading down as well as a bunch of other coins. And the concern is that if even FTX, which had sort of served as a white knight for a lot of smaller rivals over the course of the summer who had found themselves in similar situations, if even FTX isn't immune, then what does that mean for the market as a whole? It's left one big player occupying the trading space in the form of Binance. It seems in some ways anathema to the philosophy advocated by so many crypto enthusiasts, which is all about decentralization. So there's a lot of implications of this deal which has happened overnight.
But Alex, correct me if I'm wrong, but they're also under investigation in the US for certain things. So at the end of the day, what does it mean for Binance? Do they become number one? Or on the downside, what's worst case scenario for them?
So it certainly looks as though they might become the biggest player in this particular space. From a regulatory perspective, it's very complicated because they're not technically domiciled anywhere, so it's hard to know who can force them to do anything. FTX has been the company that had been advocating for more regulation of cryptocurrencies. Binance had been very much on the other side of that equation. That's one reason why there was a certain amount of tension between the two companies. Clearly, it's early days in this whole crypto space, but everybody's working out how to regulate it. But it seems as though a lot of concentration is happening before the regulators have managed to get their act together.
Alex, thank you so much. Alex Webb there from Bloomberg Quick Take on the very latest on FTX and Binance. Now let's get straight to the markets with our very own Danny Berger. Hi, Danny. What do you see?
Hi, Francine. It does seem like what Alex was just discussing there in the meltdown we're seeing in crypto as a side effect of this FTX Binance drama is dragging down the entirety of the market with it. Risk assets on the lows for the morning, with Bitcoin down at nearly 5.5%. The entirety of the Bitcoin sector, crypto sector rather, doing very poorly this morning. So S&P 500 futures, those are off by 0.4%. Europe stock 600, that continues to fall. There's also some earnings embedded in that as well. But again, it's this bigger macro picture of, is this the big capitulation if we are getting a wipeout in crypto? So what do you see on the inverse? You do see the dollar now able to claw back some gains. You're also looking at yields higher across the space. So we're looking at, yet again, a sell-off in treasuries. Now, in terms of how much of this is trading around the midterms, it is very difficult to say because, one, it might end up being that CPI tomorrow is more important for this market than the result of the midterms. But many of these races are too close to call. If I can just wrap up this hour with where we stand at the moment, it's looking less like a red wave, more like a red ripple. It does appear that it is very likely that the Republicans can take the House, albeit by a smaller margin. The Senate is firmly a toss-up at this moment. From the exit polls that we have been seeing, abortion is a top issue up there with inflation, with the economy, which might be some of the reason why we are seeing some of the outperformance. At least that's what Nancy Pelosi has called it, outperformance from the Democrats. So what should you monitor from here on out? It is 4 races that will decide the fate of the Senate. It is Georgia, Wisconsin, Arizona, and Nevada. Now, some of the nail biters in that within itself, Nevada at the moment, Republicans do see this as their top pickup opportunity. The former Attorney State General Laxalt is leading at the moment, but there's still mail-in ballots left to be counted, so that could take a while before we know the fate of Nevada. Georgia, this is going to be a tricky one and could also determine which party controls the Senate. It looks like it might be headed for a runoff. The candidate there needs 50% of the votes to go through. The Democrat at this moment has a slight win at this moment, but again, it is not at 50%. That runoff, should it occur, will happen in early December, December 6th, I believe it is. So by the end of this month, we still might not know who controls the Senate. So to put a finer bow on this, if you want to trade it, it is very difficult to trade right now. We just simply do not know. Of course, we've seen the outperformance of Ron DeSantis in Florida, an interesting turn in this narrative and what it means for 2024 and the presidential election there. Well, our election coverage and market coverage continues in the next hour with Bloomberg Surveillance Early Edition. This is Bloomberg.
We're thinking about the midterms, we're thinking about inflation.
I do think that the midterm elections will just be a small blip in what we see in markets.
With the gridlock we're expecting, it's going to help put some upward boost on the equity market.
I think divided government means you're not going to get very strong action.
This is not the time for extreme proposals from the left or the right.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. A mixed verdict in the U.S. midterm elections. Republicans appear headed towards control of the House, but with a smaller margin than expected. Final results may not be known for days. A stunning upheaval in the crypto world. The founder of Binance has become the sector's undisputed king after he swoops in to take over his rival FTX.com. And Elon Musk sells almost $4 billion of Tesla stock just days after his takeover of Twitter. There's speculation the money's needed to help deal with interest payments and losses at his new acquisition. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Kailey Leinz is in Philadelphia on assignment covering the midterms. She joins us in just a few moments' time. But Matt, inconclusive results so far on the midterms. We continue to watch that. Very decisive action, though, in the crypto space.
Yeah, absolutely. I mean, the crypto story is a huge one, but will be, I'm sure, today overshadowed by U.S. election results. Certainly, markets are focused on the election results. And until we get a decisive answer or more decisive answers, you're going to see some whipsawing going on. The MSCI Asia Pacific right now is unchanged. So the broader market is unchanged as a lot of the individual indexes swing between gains and losses, which is what we see in some senses here in futures as well. The Hang Seng right now down 1.2%, the Nikkei down about 0.5%. So these two indexes in Hong Kong and Japan are down right now, not able to keep up with the gains that we've seen in the U.S. over the last 3 sessions here in the U.S. We've seen gains leading up to the elections, but it may be concern about the results that weighs on those indexes. Here you see the S&P futures down about 0.4%, so giving up a little bit after climbing back up over the past few days. NASDAQ futures also down just about 0.5%. It's worth noting we still have a long time to go until the open this morning, and we're going to get more and more of these election results out that could sway investors' opinions on whether or not they want to own these indexes. The U.S. 10-year yield now rising. It had been dropping just minutes ago, so it's turned around, well, let's say in the last half hour, as investors are selling that debt right now. We're looking at 414.26 on the U.S. 10-year yield. And Bitcoin, this has just fallen down below 18,000 in minutes. Of course, it fell down to 17,000 yesterday. It had come back up and then lost a little bit more. We were off about 3% when I came in a couple of hours ago. Now we're down 5% to 17,740. So pretty significant in terms of the number. Of course, we've been stuck at this 19, 20, 21,000 level for so many months. But that FTX news, shocking as it was, weighing on cryptocurrencies. After Bitcoin, for one at least, had climbed up pretty significantly, and now it's down to under 18,000. Anna, what do you see in terms of Europe?
Yeah, interesting to see how much risk appetite here in Europe and elsewhere can be damaged by what we're seeing in the crypto space there, Matt. Of course, one eye on the US politics as well, as you rightly point out. This is what we've got for Europe right now. Weakness coming through, in particular on the Xetra DAX, when we're down by 0.8%. The Dutch market also looking pretty weak, down by more than 1%. And we've been volatile in today's session. And just as we've seen movements in US futures, we've seen movements in European stocks here. There was a period where NASDAQ futures were actually positive. That seems to have turned around, and now we're negative. And so Europe is negative as well. The FTSE MIB, just to point out, that was up by a few percent earlier on this morning and now down by 0.2%. In fact, this is a market, though, that's had a pretty strong October. The banking sector weighs heavily and lifts strongly on the Italian market. So that's an interesting sector to keep an eye on there. And this is one sector in negative territory here in Europe. The real estate sector down by 1.7%. A renewed focus perhaps on interest rates in Europe. Here's a bank that's making news today. Commerzbank over in Germany, down by 7%. A really interesting one because they've actually upgraded their guidance, Matt, for what they want to do in 2024. But maybe the higher interest rate story leads to better net interest margins. Maybe that's a story we've traded around in Europe already. Maybe that's already in the price. And they are dealing with some legacy costs. This goes back to the GFC, which is, I don't know how many crises ago, but pre-GFC, they were selling some mortgages in Swiss francs in Poland, and they're still paying the price for that right now. JD Wetherspoons, this is a pub business in the UK. Matt, I think you might be familiar with this brand. Down by 9%. And nothing screams cost of living crisis than pubs not doing as well as people anticipated. The trading statement looking backwards wasn't too bad, but they said that October had not been quite as strong as had been anticipated, and lots of analysts then downgrading their guidance.
There's so much that goes into the performance of pubs, right? It's not just about prices, but also about the weather and the
It's a business studies a case study.
Yeah, I'm willing to do some research next time I'm over there. Let's focus, though, on what's going on here. U.S. voters delivered a mixed verdict in an election shaped by concerns about inflation and divisions on social issues. Republicans advanced toward control of the U.S. House, but by smaller margins than had been forecast, and Democrats gained a Senate seat in Pennsylvania, with John Fetterman defeating Mehmet Oz.
I never expected that we were going to turn these red counties blue, but we did what we needed to do, and we had that conversation across every one of those counties. And tonight, that's why I'll be the next U.S. Senator from Pennsylvania.
We've got team coverage of the midterms. Joining us now is Bloomberg's Kailey Leinz. She is in Philadelphia. Kriti Gupta is in Washington, D.C., and Maria Tadeo joins us out of Brussels. Let's start, though, with Kailey in Philadelphia, where the tight Senate race ended with a Democratic victory. Kailey?
Yeah, Matt, I wasn't sure I would be here this morning telling you that we had an end result because election officials here in the state of Pennsylvania said it could be days before we had a final tally. But nonetheless, just before 2 a.m. Eastern time, this race was called for John Fetterman. About 90% of the vote count is in so far, and he had about 50.1% relative to just 47.5% for the Republican candidate, Dr. Mehmet Oz. So that is a margin of victory. That would mean that this race does not have to go to an automatic recount. And this is a crucial seat because this was held by a Republican, the retiring Senator Pat Toomey. So Fetterman's win is a flip for the Democrats. And this was a very close race that had tightened materially leading up to Election Day. Fetterman was getting hammered on issues like crime as well as inflation and the economy, just like Democrats really across the country. But abortion rights, as well as his message about getting back up when you get knocked down, really seem to have resonated with voters. Pennsylvania, of course, is a state that has more slowly recovered from the effects of the pandemic. The 4.1% unemployment rate here still higher than the national average. So that getting back up message really seems to have resonated. And of course, for Fetterman himself, it applies to him too, considering he suffered from a stroke back in May. He is still recovering from that, but he will continue that recovery as he prepares to join the Senate in January.
Okay, so Kailey, that's the Pennsylvania story, important as it is. And the fact the result came fairly quickly in the end, also fairly important, many say, for 2024. What other races then are we going to be watching carefully as these results continue to come in?
Well, there's really three races to watch when it comes to the Senate: Arizona, Nevada, and Georgia. The reason these are important is they're all currently held by Democrats. But if Republicans can take two of them, that changes the calculation in the Senate. Now, in Nevada right now, the incumbent Democrat looks like she's in trouble. It is the Republican candidate that is leading with about 70% of the vote in so far. But in Arizona, the incumbent Democrat, Mark Kelly, is ahead of his opponent, the Trump-backed Blake Masters. And then Georgia is really going to be the race to watch. Raphael Warnock, the incumbent Democrat, is currently leading the Republican Herschel Walker by a margin of less than 1%, with about 97% of votes in right now. So there are not a lot of votes left to be counted, but Warnock needs at least 50% plus one in order to secure the seat. If neither candidate crosses that threshold, this would go to a runoff on December 6th, and it is looking likely that that may happen at this point, which means we may not ultimately know the balance of the Senate for almost another month now. But one thing is very clear this morning: this is not the red wave that some had expected. The margin in the House of control for Republicans, it looks like it's going to be significantly smaller than anticipated. And of course, the Senate still this morning hanging in the balance, but that flip of the seat from John Fetterman is crucial in this midterm election.
All right, Kailey, thanks very much. Kailey Leinz reporting from Philadelphia. We'll continue, of course, to check back in with her. Let's go right now to Kriti Gupta. She's in Washington, D.C. She's got to look at the market implications of the election results that we've got so far. Kriti, great to see you. What have you got?
Hi, friend. Welcome back. You know, what's interesting about this election is that the immediate impulse here is that any gridlock is going to be good for the stock market. What's important to think about, though, is that there's a little bit more nuance here. It's not just about gridlock between the Democrats and the Republicans, bringing to the forefront, of course, regulation and tax policy. It's also about spending priorities. What do the Republicans want to spend their money on? Think about defense. Think about energy investments. Think perhaps less about things like cannabis legislation or even EV tax credits. And it's that kind of rotation within those sectors that you're already seeing the market outperform. The sectors that I just mentioned, defense and oil, really outperforming the S&P 500 recently. But it doesn't just stop there. You're seeing that in the currency market as well. Concerns about the debt ceiling and whether or not Republicans are actively going to be using the debt ceiling as leverage over the Democrats. Well, that thought has the dollar weakening, I want to say, for about 3 to 4 days now.
Kriti, thanks very much. Bloomberg's Kriti Gupta with the latest from Washington on the markets angle. The midterm results will have implications for many parts of the world, of course. For America's allies in Europe, that is certainly true. For more on that, let's speak to Bloomberg's Maria Tadeo, who's in Brussels. Maria, the world is still waiting to see how these midterms play out, so there's not much for Europe to respond to yet, I suppose. But what is Europe watching?
Yes, and Anna, of course, the results are not official, so therefore no official comment from the European institutions. But I can tell you the diplomats that I talked to, they do follow and monitor this very closely. Of course, this is a vote and it's the will of the American people. And of course, that's the way it should be. But it does have implications for the transatlantic relation. I think there's a number of questions today. If we do see a significant change in the status quo, well, what are the implications for issues like Ukraine? For the Europeans, President Biden is very easy to read when it comes to Ukraine. It's yes to the weapons, yes to the money. By the way, it's not a secret. America has provided a massive financial effort to Ukraine, and they both speak the same language. We're in it for the long haul. Could that change? That is a question in everyone's minds here. And then, of course, trade. Remember, the last time the Republicans were in a position of power under the Trump administration, there were many and multiple trade tensions between the European Union and the United States. Some have now subsided. Will they flare back? 'back. That's another issue that, of course, they'll be paying close attention to when the results become official.
Kriti, thanks very much. Bloomberg's Kriti Gupta with the latest from Washington on the markets angle. The midterm results will have implications for many parts of the world, of course. For America's allies in Europe, that is certainly true. For more on that, let's speak to Bloomberg's Maria Tadeo, who's in Brussels. Maria, the world is still waiting to see how these midterms play out. So there's not much for Europe to respond to yet, I suppose. But what is Europe watching?
Yes,
All right, Maria, thanks very much. Maria Tadeo, they're reporting from Brussels, rounding out our coverage for now of the elections. We're going to get back to that, of course, but there was a huge, dramatic saga in crypto that just exploded yesterday. Digital assets plunging as Binance moves to take over rival exchange FTX. The main problem, of course, being concerns of a liquidity crunch at Sam Bankman-Fried's empire. The deal is renewing concerns of trouble brewing within the industry because of a lack of transparency, and also, obviously, the big billionaire drama helps as well. Coinbase CEO Brian Armstrong spoke with Bloomberg about the deal yesterday.
I had a number of conversations with people over the last 24 hours, and there's reasons why that would not make sense, and I'm not quite at liberty to share the details right now. I think I'm going to let other people share that if and when they're ready, or it'll probably all come out eventually.
Sonali Basak, our global finance correspondent, joins us now for the details. So unbelievable. When I turned my phone on yesterday at JFK and saw this news, it was just shocking because Sam Bankman-Fried has been the poster boy, right, for all that is good in crypto. He's been touted as the JP Morgan of the industry. So what's happened?
The white knight, really, of the crypto industry. And now there are a lot of questions. Remember, FTX US is not necessarily part of this deal. But still, within the FTX empire, what happens to its relationships? What happens to the companies that it threw a lifeline to? And what happens to the crypto industry at large as it consolidates among the largest exchanges here? Remember, I think it's very, very important. If you're thinking like an investment banker for just a hot second, you'll see that there is a lot of skepticism on the deal. You would use a spread in the stock market to really see that uncertainty. Let's use the FTT token to show you just how uncertain people are about this deal.
That's the FTX native token.
Exactly, it's the FTX native. This is what Binance was really looking to sell into the weekend, and then now has a lot of questions around what happens to not just the token, of course, but FTX.com customers. So the deal was intended to make them whole. However, without the deal happening, if it does not happen, what happens to the customers? What happens to any dry powder in the industry? What happens to all those FTX relationships that we were talking about? You do see that uncertainty bleeding into crypto markets even further. We were just talking about it a half an hour ago. It was trading above 18,000. It has smashed down below that. There is still a bit of a floor because understanding if there's any contagion here will take time. You have a lot of the large players, Coinbase CEO, Circle CEO, really stepping up, trying to be as public as possible to show that they are more liquid, that they have stable reserves. And by the way, especially when it comes to Circle, a lot of that is in U.S. treasuries. So that linkage to the traditional financial system here is very much in vogue when you look at the crypto industry and the safer players in it.
Yeah, Sonali, that's a really interesting point, isn't it? Because during the spring, summer, when we were previously worrying about players within this space, they were smaller. Now we're talking about some of the biggest players in this space at the heart of this turmoil. So that's the deal that might or might not go ahead. I mean, it is just a letter of intent at this point, isn't it? And that also adds to uncertainty. What about the personalities involved here, Sonali? Because these two have been at opposite ends of the crypto space when it comes to regulation, and it's been no secret that they haven't seen the world the same.
I think this is really important to watch how this plays out in addition to the deal details itself, because you did have CZ of Binance tweeting a couple of days ago, really speaking to a little bit of doubt, a lot of doubt really, in terms of how Sam Bankman-Fried and FTX was talking about their space in Washington vis-a-vis the entire industry. And so I think that the way the industry dynamics play out, get on board, get on the team of the entire industry, or get out, I think is a really important dynamic here. Trust within how the players together advance the system. Because as you can see, what happened here is if that trust starts to break down, you do see major exchanges really pit against each other. It's hard to know exactly what the motivations were of Binance was to sell. There was a CoinDesk article days ago linking the FTT token and FTX.com to Alameda, Sam Bankman-Fried's other trading entity. And so it's hard to know what the exact motives were for the selling, but it is clear that there was a concern and a frustration between how the different players were dealing with regulation.
Yeah.
The other thing Coinbase had mentioned was a lot of the trading moving outside of the US, and this being another opportunity not just to look at the system itself, but also how the US regulated entities create stability, or the lack thereof, for crypto customers and the system itself.
Right, and of course, transparency is one of the main concerns, and ironic that we're worried about transparency with SBF because he was one of the champions of regulation. We'll continue to be covering this, obviously, for weeks to come. Sonali, thanks so much for joining us on that. We're going to talk about it, of course, on the Bloomberg Crypto Show. We have special coverage tomorrow at 1 p.m. New York time, 6 p.m. in London. If Kailey doesn't freeze to death in Philadelphia, we're going to get her back in here on set for that as well. Now, let's take a look at some of the stocks moving in the pre-market this morning. Tesla is up around 1% today. CEO Elon Musk sold 19.5 million shares just days after closing his buyout of Twitter, and the stock had fallen over the past few sessions as the rest of the U.S. market was rising. But it is bouncing back a bit. The total amount, by the way, of stock sold by Elon Musk since, or including what he dropped in August, is down or up to about $36 billion. So just keeping that in mind. Disney is down over 7% after disappointing earnings results. The CEO, Bob Chapek, is vowing to cut costs after quarterly losses at its direct-to-consumer arm, including Disney Plus, more than doubled. We're watching that crater of the stock, though, down almost 9%. Coming up, Louise Dudley, Federated Hermes Global Equities Portfolio Manager, joins us, Anna, and we're going to get special coverage of the COP27 event in Egypt as well.
Yeah, absolutely. We'll be speaking with the former U.S. Vice President Al Gore. He'll be joining the team on the ground. And we'll also hear from the CEO of Edison International, a great voice to have to talk about the electricity industry in general, the California experience specifically. This is Bloomberg.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller here in New York with Anna Edwards out of London. Kailey Leinz is on assignment in Philadelphia. I'm looking at a chart of Bitcoin in white and S&P futures in blue. After the shocking story yesterday of Binance taking over FTX, the main concern being a lack of liquidity at the latter, we saw a huge move in Bitcoin, which is the big blue chip crypto, of course, of the industry. It looks like it pulled S&P futures down with it. And the question then for me is, how much contagion could we see from a relatively small crypto industry in a gigantic equities market? Joining us now is Louise Dudley, Federated Hermes Global Equities Portfolio Manager. Louise, what do you think about the concern of contagion?
Yeah, certainly there are a number of names, a basket of names, not a really broad spectrum, I would say, who are obviously tied to Bitcoin, gaming, all of those areas. But I think while, energy prices remain high, actually, we've seen a lot of that already priced in. Bitcoin's been weak for so long that actually it's really something we're not too worried about. And I guess maybe it's more on the kind of retail side, and probably some of the names that had some of that growth priced in have already come down year to date.
Okay, so that's where we maybe see some read across. I mean, there's a lot of talk about the contagion within crypto assets, but also into other assets, even if it's just in terms of sentiment. Something that maybe also is weighing on sentiment is a lack of certainty, Louise, on US politics. What are you waiting for? What are we waiting for as a sort of market body? What are we waiting for to get some certainty to see the way ahead on US politics? Because it's clear that if we're waiting for the end of the Senate race, we could be waiting until maybe December.
Yeah, I think, at the moment, things are not too far from expectations. And I think, for the market, when at the moment people are quite focused on the near term and those kind of near term macro numbers, manufacturing, et cetera, inflation numbers, rather than actually looking at that this is going to make too much of a difference for the next couple of years. And I think because we have those macro concerns being so extreme at the moment, that's really what's capturing investors' attention, and this isn't going to swing the dial too much.
And one of those macro concerns is very much around inflation, Louise. After we get through, at least today in US politics, we have a key data point, inflation, due out of the US tomorrow. Are you expecting to see some moderation in core CPI? And what will that mean if we see that?
Yeah, I think we are. I think everyone's kind of looking for that. But I think it's the next kind of level effect of what the Fed then does. And until we start to see unemployment coming up, we do expect, that surface inflation to be a number that people focus in on. And if we expect that to be high, which is in line with what we're thinking, then actually, we're going to continue to see interest rates being as elevated as they are. And until we get that, we're going to be in this quite bearish, quite negative risk-off type sentiment for equities.
I got to say, it doesn't feel that bearish to me, Louise. I've been on a 2-week holiday, and before I left, we were under 3,600 on the S&P. Now we're back over 3,800. We were flirting with less than 29,000 on the Dow briefly before that. Now we're back over 33,000. Things look relatively rosy as we head into year end. What's your forecast?
Yeah, I think, people are very focused on the kind of the near term and maybe looking for some of those rebound names, but actually looking into earnings for 2023, I don't think the market has really priced how much lower they can go. We've seen lots of negative revisions from companies, so really a sea of red across those expectations, and the market just hasn't really taken them into account. We have seen some individual names being punished if they've been far off their guidance. But we think in general, people have been kind of too near-term focused. Actually, they haven't kind of looked out to see where that might come. That said, the surprise potentials that are on the scene, and maybe that's what people are hoping for in terms of, some uplift with regard to the war, in terms of some type of ceasefire. Obviously, the Fed could pivot if these inflation numbers aren't as bad as people think, and also those manufacturing numbers may be influencing the Fed as well. So there is some upside potential, but in general, we think the bear market's got a bit more to run still.
Okay. Louise, thanks so much. Louise Dudley of Federated Hermes with her views on the market. Coming up, we will be live at COP27 in Egypt once again. Our colleagues on the ground will be with us. Francine Lacqua talking to the former US Vice President Al Gore. A lot to say on climate, of course. That conversation coming up shortly. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. A mixed verdict in the US midterm elections so far. Republicans appear headed towards control of the House, but with a smaller margin than expected. Final results may not be known for days. A stunning upheaval in the crypto world. The founder of Binance has become the sector's undisputed king after he swoops in to take over his rival FTX.com. And Elon Musk sells almost $4 billion of Tesla stock just days after his takeover of Twitter. There's speculation the money's needed to help deal with interest payments and losses at his new acquisition. I'm Anna Edwards in London with Matt Miller, and Kailey Leinz is on assignment. She'll be with us shortly in Philadelphia. Matt, I'm in London, you're in New York, firmly with eyes on the markets, dealing with electoral uncertainty and big moves in crypto.
Yeah, I'm looking at what's going on in terms of the gains that we've seen really over the last 3 sessions. They may turn around this morning. At least U.S. futures indicate that we could see a drop of about 0.5%. Right now, S&P futures at 38.17. But, this is, as I said, a much better board than I looked at in terms of the total numbers when I left 2 weeks ago. So we've been climbing ever higher. The NASDAQ as well, although it could give up about 0.5% today as we get closer and closer to the open. Still 4 hours to go until we see U.S. stocks open. There has been some turnaround in terms of treasuries. We did see investors buying treasuries, pushing the yield back down. Now the yield's floating up ever so slightly, just 2 basis points at 414.26. But to me, the big story is what happened over at FTX. What happened over at FTX? It looks like they didn't prepare well enough for a crypto winter. and may have to sell the business to Binance and CZ, the leader there. Now, I say may because it's non-binding so far. There's a letter of intent, but we have still due diligence to go. And as we know, these deals, especially this year, could fall apart. Maybe that's why Bitcoin is down right now 7% to $17,408. There's also a lot going on in terms of individual stock stories today. Tesla, for example, right now bouncing back a little bit, but we've learned that Elon Musk has sold another $4 billion in shares, 19.5 million shares. This is just days after closing his buyout of Twitter. And that brings the total amount of stock sold this year for Elon Musk to $36 billion. That's almost enough to cover the deal. In fact, if you include the $13 billion that banks gave him in debt, that is enough to cover the deal. He's got a lot of interest payments, of course, to make, a little under $2 billion. I think actually $1.2 billion in interest every year now. And of course, they're bleeding cash. Disney right now falling about 8%. So doing a little bit better than it was when we checked about a half hour ago, but still a huge drop after CEO Bob Chapek vows to cut costs. They have quarterly losses at their direct-to-consumer arm, including Disney Plus. That more than doubled. That's a concern for investors. And speaking of investor concerns, at a slightly smaller company, but not tiny, Lucid is a $20 billion company, right down now 8% in the pre-market. Third quarter sales and earnings trailed estimates, and I should use the term earnings very loosely because, of course, they're still losing money to the tune of 40 cents a share. We were looking for a loss of only 31 cents at the electric vehicle maker, so doesn't look good for Lucid, certainly in terms of the pre-market today. Anna, what do you see in terms of Europe?
Yeah, just quickly through the European session then, because we're really waiting for resolution around US politics. We're waiting for further updates on crypto. But this is what we've got. European stocks are down by 0.7%. To the downside, we see real estate stocks, property stocks taking the brunt of it, down by 1% today. Commerzbank down by 6.2%. The upsides on net interest margin from higher interest rates, that's a well-known story, and that wasn't enough in the case of Commerzbank, which upgraded guidance, not enough to distract from the fact they've got legacy costs still to pay that go back as far as the GFC. Wetherspoon's the pub business in the UK, 6.8% weaker on the back of the cost of living crisis that, of course, we've talked about many times, Matt.
Yeah, absolutely. All right, let's get to COP27 right now. The UN climate talks continuing in Egypt. Bloomberg's Francine Lacqua has been there. She's covering the event for us, and today standing by with a very special guest, former U.S. Vice President Al Gore, for a conversation on climate, but also, of course, his reaction to the U.S. midterms. Francine, take it away.
Yeah, Matt, thank you so much. I am very excited to speak to Vice President Gore. Thank you for joining us on a momentous day also with U.S. politics.
Yeah.
What does a Republican win in the midterms mean for money flowing to poor nations?
Well, first of all, we don't know the final outcome, and it looks as if the Democratic Party may hold on to control of the Senate, which is a startling outcome because, as you know, normally the first midterm election for an incumbent president's party sees the big losses, but it's not happening. There wasn't a big so-called red wave. So we'll have to wait and see how this plays out.
So what does it mean, though, for, I mean, we heard the Republicans. So if this goes the way the Republicans wanted it to, they said, for example, they would go after companies that were not friendly to fossil fuel. What does that mean?
Well, the markets are making a different decision. We have seen last year worldwide, if you look at all of the new electricity generation built and installed worldwide, 90% of it was renewable because it's now the cheapest electricity in world history, according to the International Energy Agency and other experts. So we're seeing a massive movement toward more climate-friendly policies. In fact, we're in the early stages of a sustainability revolution empowered by artificial intelligence and new digital technologies, a revolution that has the magnitude of the Industrial Revolution coupled with the speed of the digital revolution. So whatever politicians in different countries want to opine on, we're seeing business and investors and markets move towards solutions for the climate crisis.
I know there are big question marks, but so even if the Republicans do end up winning the midterms, it does not necessarily mean that it will make it harder for poorer countries to get to net zero.
Well, look, as I said in my speech here at the opening of this conference, there's a credibility problem for all of us who have been saying, you know, we've got to meet these pledges. There have been impressive pledges, but this is called an implementation conference because now is the time to follow through.
And show me the money.
Show me, as the Jerry Maguire movie said,
Right?
show me the money. Yeah, and you know, let me give you a quick example, Francine. Solar energy is the best, cheapest, pollution-free energy. If you're in Nigeria, you want to build a new solar farm, you have to pay interest rates 7 times higher than are the rates paid by OECD countries. That's crazy, because 90% of the expected increase in emissions will come from developing countries, and 86% of all the financing for renewable energy and other sustainability advances comes from the private sector. We have to open up access to private capital markets to the developing world.
And do you think we'll do it? I mean, this is about action. This is COP27
Yes, I think so.
implementation.
I think there is an emerging consensus here that we have to have leadership in the World Bank focused on new policies, and deeper than that, we have to have reform of the World Bank with more special drawing rights, more leverage, so that they can devote more of the world's private capital toward these incredibly sensible and profitable investments in pollution-free, cheaper, sustainable energy, which, by the way, is massively deflationary at a time when the world needs to fight inflation.
You're frustrated that the World Bank is not doing more. Why is it not doing more?
Well, I don't want to make it personal because it's more important than that. But the leader appointed by the previous U.S. president has been known as a climate denier. And the bank is still offering its support for fossil fuel. It's crazy. And worldwide, we are still seeing taxpayers forced to subsidize more fossil fuel at a rate 37 times higher than the meager subsidies for renewable energy. That has to be changed.
Vice President, talk to me a little bit about financing. So if you look at GFANZ, which was started in Glasgow, this is basically an alliance of asset managers and financial companies to help the transition. The members grew. Maybe it has less teeth than we thought it would. Is it better to have a broader church but be less ambitious?
Well, you know, one of the keys to making GFANZ and the other groups that are making commitments of this kind work, like the Asset Managers Coalition that is committed to net zero portfolios. We launched today the Climate Trace Initiative, which now gives accurate measurements of the exact amounts of global warming pollution coming from every significant source of global warming pollution in the world, so that the GFANZ members and the Net Zero Asset Managers Alliance and the 88 nations that have made net zero commitments can be held to account. Because now we know where the pollution is coming from, and we can measure whether they're following up or not.
But if there's a choice between having a more robust framework, a more aggressive framework with less members, or a less aggressive framework with more members, what would you choose?
Well, that's an interesting question, very, very thoughtful question. I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Why is the Chinese president not here?
Well, first of all, Xi Jinping, who is one of the most capable climate experts and negotiators in the world, a dear friend, saw him yesterday. He is here, and President Xi Jinping is due to meet with President Joe Biden in Bali at the time of the meeting there, and they are going to restart this climate dialogue, I feel certain. So I'm optimistic that in the wake of the Party Congress, now China will get back into a cooperative relationship with all the countries that are trying to solve this climate crisis. China's being hit by it worse than almost any country. The Yangtze is at its lowest level ever. It's really having an impact on the Chinese economy and some fear on the stability of China. And that's what the Chinese Communist Party pays closest attention to. So I hope that they will re-engage with the world community.
Mr. Vice President, thank you so much for joining us. That was, of course, Al Gore. And with that, I'm going to send it back to you in London, Anna.
Francine, thanks very much. Thanks to Al Gore. Thanks to Francine Lacqua over there in Egypt at COP27. Still to come from COP27, we'll be speaking to the CEO of Edison International. Big players, of course, in the Californian energy market. A really important conversation to be had about the resilience of energy networks and investment. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with the Kraken chairman, Jesse Powell. That is at 5:30 p.m. in New York, 10:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London, and we continue to have midterm election results roll in. So far, one of the few dramatic results that we've seen is Fetterman beating Dr. Oz in Pennsylvania. We heard about that, Anna, from Kailey, and we'll continue to go through the results. But it looks still like the Republicans could take control of the House, a result that was widely expected. Maybe the margin won't be as strong as we had thought earlier, but we're not going to get a lot of the results in for days, some for weeks or maybe even months. For example, in Oregon, the entire vote was done by a mail-in ballot, so we won't know the results at all for a long time.
And some of these things might go to runoffs, and then you're waiting until sometime in December, aren't you, Matt? Interesting to think about where this leads us on the road to 2024. And one analyst I spoke to today said the road to 24 starts right now. And with that in mind, interesting to see how maybe those candidates backed by former President Trump have not done as well as anticipated in some areas. And Ron DeSantis has done well to be re-elected to get his space back, so get his position back. So that's an interesting dynamic to watch in terms of defining the identity of the Republican Party.
Yeah, let's get over right now to Kailey Leinz. She is on the ground in Philadelphia to give us the story of, well, the Fetterman victory, but also the election results that we know so far. Kailey, what have you got?
Well, the Fetterman victory story certainly is a remarkable feat for Democrats because this was the seat of Republican retiring Senator Pat Toomey. So this is a flip for the Democrats. That is a big deal. Assuming the Democrats can hold on to all the other states in which they already held, that would mean that the Senate is now 51, a majority in the Senate. But those states otherwise are very much in question. Nevada, Arizona, Georgia, all at this point we are still seeing results rolling in. In Nevada, the Democratic incumbent Catherine Cortez Masto is currently behind the Republican challenger, Adam Laxalt. Only about 70% of the votes are in at this point, so that count obviously is ongoing, but that is one area in which a Democrat looks like they are in trouble. Then in Arizona, Mark Kelly is ahead right now by a pretty decent margin. But again, we still have a significant amount of votes that need to come in. And Georgia looks like it is going to go to a runoff, guys. Remember, in Georgia, you have to have 50% of the vote plus one in order to secure the election. Right now, neither candidate has it. You have a narrow margin of a lead for Raphael Warnock, the incumbent Democrat, leading the Republican candidate Herschel Walker at this point. But if neither can cross that threshold, December 6th is the date we're going to be looking at for a runoff in Georgia. So we maybe not know the balance of the Senate for about a month now.
OK, so maybe this is then, Kailey, a red ripple, as our colleague Danny Berger said earlier on, rather than a red wave. Kailey, thank you very much. Kailey Leinz joining us there with the latest on U.S. politics. Matt?
Yeah, well, I want to say also, it just can't be downplayed how much they can do with control of the House, right? We would see probably a massive increase in investigations. And of course, the House is able to impeach a sitting president, as we saw with Donald Trump a couple times, even if the Senate doesn't vote to convict. So very interesting results there. Let's get back, though, to the climate right now and COP26, the summit in Egypt. We're joined by Edison International CEO Pedro Pizarro. Pedro, thanks so much for your time. Appreciate it. I wonder what you've learned at the conference in regards to something that Francine Lacqua and Al Gore were just talking about. It seems there are, at these events, a lot of commitments, a lot of promises, and indeed we hear them from companies throughout the year as well that just never really get any action, execution. Are we going to follow through this time? Is that the focus of COP27?
Yeah, absolutely. And Matt, thanks for having me on. This is my third COP, and what I've seen across the arc of those three COPs is that there's an increased presence, particularly from corporations, and an increased sense of urgency. The reality is that last year, 40% of Americans lived in a county that experienced a major impact from climate change. So action is imperative, and there's a lot of good talk here, but to your point, we need to see that translate into action over the long term.
If we see continued problems like those that we've seen in California, what does that mean for the future? And I know Edison operates Southern California. Edison, for example, an electric utility that most people living there will be familiar with. There were days when residents were asked not to charge electric cars, which seems to run at odds with the goals of those trying to fight climate change.
Yeah, so Matt, it's important to note that there were hours when residents were asked not to charge their cars, not full days. Those were hours when residents were asked to conserve power. The reality is that we experienced a major heat wave, a heat storm across the entire West. And what we've seen is an increase in the impact of those sort of events. I will also say, though, that the state was much better prepared this year than it was in 2020. So we learned lessons from that. And look, the reality is that we have to deal with climate change. A certain level of it is already locked in, and we're going to have to deal with those impacts. So we need to be investing both in adapting to what's coming, but also in mitigating the impacts. So electric vehicles are a big part of the solution as we look at how California gets to net zero. And that's the world's fifth largest economy, so therefore it's instructive for the rest of the globe. We see that using clean electricity to then repower much of the economy will be critical to help mitigate climate change. 3/4 of passenger vehicles will need to be electric by 2045, 90% of buildings. So now with that comes a need for operators like ourselves to make sure we're making the grid more resilient, redesigning how we operate that to decrease the chances of those power outages, be better able to withstand the impacts of climate change. And we're working on that not only at Southern California Edison, but really the whole industry.
Okay, Pedro, good to see you. Clearly, this has to do with then. This is all about investing in the future and in climate technologies, climate change-friendly technologies. What's the political backdrop you need for that to take place? Away from the California story, the overall story in the United States. We're sitting here digesting the results as we have them already on the midterms. How much are you concerned that if the Republicans hold more power in the House, that there could be blockages in the way to the investment path you describe?
Well, I'm fortunate to be vice chair of the Edison Electric Institute, which represents investor-owned utilities across the country. And we have been very engaged with both sides of the aisle throughout the past year. And so I would note that the bipartisan infrastructure bill was a bipartisan bill. So we have seen the two sides of Congress be able to come together and work on action. As we look at potential for a change House, and we're still waiting to see what happens in the Senate, regardless of what happens there's a few things that I think will remain constant. First, our industry is committed to working always with all sides of government. Secondly, I do think that there's a recognition by leaders in both parties that we do have climate change, that we do have to deal with mitigating that and adapting to it. Now, of course, there are different views and different thoughts on that, but I do think there's a common core around the fact that there's something that we need to do here. And importantly, we now have pieces of legislation that will be implemented. So we plan to continue working on that. One final thought, is that this is also about American competitiveness. The reality, sitting here at COP27, you see that these technologies are getting adopted on a worldwide basis. Some of those are manufactured in the US, many of them are not. And so bringing as much of that activity back to the United States will be good for American business, for the American economy, and for jobs.
And we spoke, Pedro, to Al Gore just a little while ago, who talked about sustainable energy being massively deflationary. Does it feel that way? Is it that way in your experience?
So one of the interesting outcomes of a study that we did around the economics of net zero in California is that, yes, there's a lot of investment that's needed up front. There's a cost to that, but that cost is frankly lower than the cost of inaction, given the climate impacts we're seeing. But just as importantly, when we look at our average customer in 2045, once that customer has electrified their home and their car, that customer will be spending more on electricity, they'll be using more electricity, but when you look at their total energy bill, electricity plus natural gas plus gasoline, that bill will be 1/3 lower in real terms than it is today. And that's because of the greater efficiency of electric technologies. That is deflationary. And oh, by the way, it also helps create clean jobs along the way. So we do think that while there's obviously some pressures right now in the next few years, in the long run, this is beneficial for the economy and for consumers.
Yeah, because California has some of the highest electricity rates in the country, as you well know, Pedro, and some are concerned about the effect that has on lower income consumers, that it's too costly for them to buy an electric car to fight climate change and then charge it at these rates. How do we get through that period? Are you concerned about those consumers as well?
Well, two quick thoughts on that. One is that one of the items that we're now including in our materials for investors every quarter is an interesting chart that shows the total energy cost for consumers for Southern California Edison, as well as for around 20 some other states where the data was available. And what you see there is that actually, while we do have high electric rates in California, our consumers are actually have lower energy costs than the median across the United States. So again, it's a combination of electricity, natural gas plus gasoline that we need to keep an eye on. The other quick thought is that that's where items like the Inflation Reduction Act come in. The fact that, for example, there's a $4,000 used electric vehicle tax credit, right? So that this transition isn't just about people who can afford an expensive new car, but about folks who can only afford a used car and maybe one of the lower end models. More and more electric vehicle models coming out, of course. So that $4,000 credit is going to be critical to making sure that this transition is for all customers, including our low income and disadvantaged communities. And as we look at our programs, for example, we have the largest utility-based programs to support electric vehicle charging in the country with over $800 million that's been approved by our Public Utilities Commission. Those programs are heavily tilted towards having more of the support go to the folks who need the help the most, towards our low income and disadvantaged customers.
Pedro, thanks so much for your time. We appreciate it. Edison International CEO Pedro Pizarro joining us there from COP27 in Egypt. That is it for Early Edition. Surveillance is ahead with Tom, John and Lisa. They'll be hosting live from Washington, keeping you up to date with the results as they continue to come in from the US midterms. They'll also, of course, have one eye on crypto. This is Bloomberg.